We're in Denver, Colorado at EnerCom's 19th annual Oil and Gas Conference. I have the pleasure of welcoming Robert Turnham, the President and Chief Operating Officer of Goodrich Petroleum. Hi, Robert.
Hello.
Now, Goodrich has the bulk of its acreage, over 300,000 net acres, in the Tuscaloosa Marine Shale. Give us a quick summary of your operation there.
We just typical of all shale plays that we've been involved in. We moved very early, put this acreage position together of over 300,000 net acres, and currently have about 3 rigs running. And we're forecasting expanding that to as many as 5 rigs by the end of the year.
What do you foresee as far as CapEx going into the TMS in the next couple of years compared to your other shale plays?
We have a total CapEx budget this year of $325 to $375 million. Of that, $225 million is dedicated to the TMS. I think once we bring in a partner or increase our funding, I think you could see us expand that to as much as $500 million next year for 2015. So yeah, we're just in the early delineation phase. Things have gone very well. We've proved that the play is working, and now we're expanding our activity levels to as many as 5 rigs by the end of the year.
Robert, you have acreage and operations in the Eagle Ford and several locations in the Haynesville. What can investors expect to see coming out of those regions?
The Eagle Ford has really driven our oil volume growth and cash flow growth over the last 3 years, but we are spending less capital there as we transition into more capital in the TMS. So the Eagle Ford still provides a good bit of our cash flow, a good bit of our borrowing base, but you could see us potentially divest that field next year if we continue developing the TMS like we think. It's been a very good property for us. It continues to be a very good property for us, but it at some point becomes dispensable. The Haynesville, we want to keep that gas optionality. We have 76,000 net acres. It's either held by production or subject to continuous development provisions, so very little capital has been allocated to those fields. But we think maintaining that footprint is advantageous for the future when we see better gas prices.
What technologies are you using to extract the highest and best rate from your wells?
Well, in the TMS, our whole thesis has always been the early wells that were drilled there weren't optimally completed. It's all about where you land the lateral, how long the lateral is, how you frack the wells, both in a proppant amount, frack intervals, and the style of fracking. So when you look at our design in the TMS, we pump about 550,000 pounds of proppant per stage. That's more than what some of the early wells were doing. We do hybrid frack jobs. We think that creates more complexity, better well results. And so the technology over the last few years that we're applying here and the completion recipe, we think is a big part of why our wells have been so successful. And we think that's going to allow the play to become one of the premier oil plays in the nation.
What do you think about the lifespan of the shale boom will be, and why?
Well, the shale boom is here to stay. We now have ample resource in both natural gas and oil. The dynamic of that for the United States is tremendous. When you look at importing less oil, when you look at domestically producing it, and perhaps even exporting a little bit of oil down the road, that's going to put ourselves in a much better, more sound footing, both from a financial standpoint and the ability to not have to support foreign regimes because of oil. So the shale boom is here to stay. The challenges of the shale are just, it's capital intensive, and so constantly need to figure out the best way to access capital to develop the acreage. And we're a company that moves early. Our strengths are acquiring acreage, and then we figure out the best way to access capital, and that will continue in the future.
Well, we wish you all the best of luck, Robert.
Thank you very much.
I'm Quinn Nguyen for OilandGas360.com.